Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. With the U.S. market closing in on those all-time highs for both the NASDAQ and the Standard & Poor's 500 that I previously showed you in detail, there has to be some good days to get there, and today is certainly one of them. Unlike some commentators, however, who think, for instance, that the S&P 500 hitting new highs is a forecast of ongoing future bullish markets, I am powerfully inclined to view things as closing in on the time when we should be very much increasingly wary and selective as to the stocks that we are holding. This applies most strongly to the growth stocks in the NASDAQ 100. Remember that both times in recent years that the NASDAQ reached its HB1 price, that's 9.5 times book value, it suffered significant setbacks. Nothing that I can see today would suggest anything else is likely this time around as well. With less than 5% to go before both indices reach their respective boundaries, caution, not optimism, should be our focus. Now, if a top is in sight, what sort of top would I be looking for? Well, in recent years, we've seen two kinds of tops. The first one was that sort of long, slow market peak that took about 5 months to unfold that we saw in 21-22. And it took its time to unfold, and then it plunged precipitously. The second was the hit and immediate setback that we saw earlier this year. But there is a third kind of top that we have experienced, and that example started at the 1998 peak and carried the so-called Nifty 50 stocks down off their perch, but which took a long time to unfold completely. Those Nifty 50 stocks were the Magnificent 7 stocks of their era. And the poster stock was Coca-Cola, which managed to lose half of its price and 70% of its valuation in price-to-book terms, and never skipped a beat in its growth profile. An intriguing challenge to us all. The Magnificent 7 stocks do not need to see a collapse of their fundamentals to experience a huge setback in their prices and valuations. They just have to revert to their intrinsic SVA values, what we call their fair market value measures, which we plot on every SVA chart, as Coca-Cola did back then. Anyway, without further ado, let's take a close look at what happened this week. As always, before I do, I'd like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, well, of course, we'll start off with NVIDIA. And yeah, everything looking really good, but you know, the stock just continues to kind of cling to its HB7 price, eh? That's 43 times book value, and does not seem to be able to escape and move on back up to its old high at its HB8. Now, there's a couple of reasons, and one I want to show you right now. Let's go and take a look at ASML Holding. And of course, this is a company that supplies the machinery to build those chips, eh? And look what's happened here. First of all, in the longer term view, ASML had a 2 breakpoint setback, rallied 2 breakpoints, 2 breakpoint setback again, rallied 2 breakpoints, had another 2 breakpoint setback, but this time, instead of finding its footing and starting to rise again, it has broken below the HB3. A bit, I would say, of a cautionary measure by the market. Now, we can go and look at some of the stocks that actually have provided the platform for AI. And let's take a look at three of them. Amazon. Well, Amazon continues to drift along its bubble price. That's 7.4 times book value. Does not appear to be gathering any momentum for any kind of a move back to the HB1, which I had thought might be possible, but has shown no tendency here at all. Alphabet. Well, Alphabet had a beautiful bottom, right at its mid-super growth price, had a nice bounce. But what's been happening lately? It's been kind of rolling over. Again, not promising for those AI platforms and their outlook. Microsoft has just been, well, fundamentally kind of drifting sideways, a little bit, has not shown any tendency to fall to its HB1 price yet, but it has shown no tendency whatsoever to rally back to its HB2 price. That's 12 times book. And partially, of course, you can see why. Look at what's happening to the intrinsic value, its fair market value. It's just been kind of drifting sideways. Now, Meta, well, Meta has had that beautiful breakout over its bubble price, and that, of course, was a very, very, very long-term high for the stock after that beautiful run from its growth price to its bubble price, which, by the way, I had thought would be about all. But its fair market value has continued to rise slowly, and the stock has broken out. But, you know, I had thought that with the market, either the Standard & Poor's or the NASDAQ, to move to its next higher breakpoint, I had thought that Meta would kind of go with the market and would get back or would head to its HB1. Hasn't happened. It's kind of rolling over again. Again, the promise of AI is there, but it is fading. Apple, really same story. Although the stock has been drifting actually dead sideways here. And we'll have to see what happens. At this juncture, by the way, I really don't want to make any pronouncements on the stock because the next quarter is due to, or the third quarter is due to be reported in very, very early November if I go by history here. So we're going to find out whether that upward sweep of the balance sheet is true, or whether in point of fact they have been buying back stock and pulling that trend down. It will then, I think, give us a fair hint as to what we ought to be doing with the stock. Tesla, well, Tesla, it had hit its HB2, set back to its HB1, and it actually slipped below the waves, and then suddenly, well, our friend Elon Musk managed to pull another rabbit from the hat, and the stock has nearly jumped all the way back to its HB2 again. That's 12 times book. It'll be interesting to see what happens from here, because that's where the stock is topped out twice before. By the way, I still don't like the company, and I still don't like the fundamentals. Finally, Netflix. Well, Netflix, after drifting along, actually banging up against its HB2, Now for, well, since July of this year, actually longer than that, since, I guess since June, or May, June of this year. Forget that breakout. That did not occur. As you can see, we had a new balance sheet and it kind of pulled the structural price down below the previous high. So it has been drifting right along. Well, never mind all that stuff. It's now broken out. And the question is, where does it go from here? Well, let me remind you, first of all, and you have seen yourself over the 5 years that we've had FANG Friday being webcast. When you get a breakout, you often, or most often actually, get a kind of a breakout pullback. Well, as the market is very close to its peak, we're going to be testing that hypothesis on this particular breakout. So, my general advice, I think, here is, looks very promising, but let's go and see what happens when we test that hypothesis against the market. Now, initially, I promised you that we would take a look at what I called the third option, and that is to say the long, slow, and then the big collapse, the hit, and the collapse. Well, there is another kind of top, and it occurred to the Nifty 50 stocks, and I told you that my poster stock was Coca-Cola, and I'm going to show you the chart of Coca-Cola going back to its peak in 1998, and then what happened subsequent to that time. So here we are at the peak of Coca-Cola in 1998, and then of course here was the long the bear market, if you'd like, that actually hit the market, although it started in 2000. But Coca-Cola's bear market started in 1998, and it unfolded in a very interesting way. Basically, down to up one movement, down to up one, down to up one, down to, and then down the last two. Okay, so it took its time unfolding. Now, what's interesting about that? Well, if we look at the intrinsic value of the company, the dotted line, what do we see? We see that Coca-Cola continued to grow at a 15% compound rate during that entire period. So, you don't necessarily have to have a collapse in the fundamentals to get a large setback in a growth stock. And I think we need to keep that very much in mind, because the Nifty 50, the Magnificent 7 stocks, of course, have been front and center for many years now, the same way that the Nifty 50 were way back when. So anyway, to briefly recap off the top, NVIDIA is riding its HB7 price. That's 43 times book, but has not broken higher to any significant degree, despite the loud cheers from its CEO, Jensen Huang. Despite the absurd valuation of the stock, I suspect that he still wants to have the biggest market cap in the world, and he's very, very close. For sure, there has been good estimated growth in its balance sheet, and therefore its structural pricing, which is far more than we can say about Apple, the stock he wants to beat, due to very robust earnings forecast. But future sales and earnings, as I showed you, are in question. And I am still for Missouri as far as the real business impact that artificial intelligence will have on the economy. The big question that I have is, in a correction, how far down will the stock go? To back that concern, I reviewed ASML Holdings for you, as well as the SVA actions of three main AI platform stocks, Microsoft, Amazon, and Alphabet, all of which continue to deny much hope for explosive growth in the field. Now, Meta has slipped a bit this week, but remains a hold. Certainly, if the NASDAQ 100 reaches back to its HB1 price, that's 9.5 times book, I thought that Meta could easily go the extra mile to its own HB1 price. Based on this week's market action, though, I fear that this does not look to be as likely as I had thought. We are so close to Apple's third quarter report that I don't want to make any pronouncements on its valuation. It's hanging in there and giving NVIDIA a run for its money. And I wouldn't take any action one way or the other, whether A, you hold a stock, or B, you do not hold and are wondering what to do. We have a week or so for that third quarter report, and I would exercise patience. As far as Tesla is concerned, it has leapt from the near dead almost up to its HB2 price, or 12 times book. I had remained bullheaded and maintained a sell on the shares, and was glad that I did in the past 2 weeks. But Elon Musk has managed to conjure up another rabbit. Will he be third time lucky at this critical breakpoint? Let's see. Finally, Netflix is holding just above its HB2. That's 12 times book. Remember, as you've seen over the years on FANG Friday, it's very unusual to see a breakout, or it's very usual, to see a breakout pullback kind of market move. With the potential market peak close at hand, I don't think we need to rush to any conclusions about what to do at present. Anyway, that's all for this week. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next week.